Hi traders, I am Temilo and welcome to my YouTube channel. Today's video, I'll be showing you a trade I took on gold from the last NFP, which was on February 4th. And I'll also be explaining in details supply zones, demand zones, break of structures, and imbalances. Let's get right into it. I'll be using gold as a case study. And what are supply zones? Supply zones are zones that investors or traders initiate sell orders from. These zones are characterized with huge momentum candles. Strong supply zones will come with imbalances as well. For example, on this daily time frame on gold, we can see this supply zone that was followed and characterized with a huge candle, and also these candles had gaps in them. These gaps are called imbalances. So the knowledge of supply zones, demand zones will make us take profitable trades in the forex market. Also, supply zones, strong supply zones tends to break structure. What do I mean by break structure? In forex charts, we have the bullish movement, that is when candles go up, when the price go up. We have the bullish movement, and we have the bearish structures, that is when market is going down. So these structures tends to be broken as price continues to move in the market. And as we can see, in this structure, we had a move from the downside to, the top right here. Once this low is being broken, we will say we have a break of structure. That is, the market has decided to now change direction. In this scenario, we can see that the market was pushing high, breaking above previous highs that was in the market. So normally we were expecting that the market is supposed to tap into this zone and give us a new high. But in this case, the market went below this previous low, creating a new low. So once we break this low, when there is a shift in structure, when there is a change of character in structure, market tends to go back to mitigate the zone, the inception of the move. That is, market tends to come back to mitigate the orders that was created right here in order to continue the move. As we can see in this, after the market created this low, markets pushed back up to mitigate this zone, resulting in another new push. Also, if we take a look at the new structure we created here, we have this low, created this high, we have new low, we created a new high. Now the market has broken below this previous low, giving us another new low. Now we can say we have a break of structure right here. We have a break of structure. With our knowledge of supply zone, we can see that yet again, the market has created another supply zone right here. And this zone is also characterized with a huge candle, a huge down candle that also has in it imbalances on LD price action. So the knowledge of this zone will make us to know the direction of the market where we are going to mitigate. So I was on the, I think the 4 hours time frame on February 3rd. The market had just mitigated this zone right here, this 4-hour demand zone. Just like we have supply zone, we have what we call demand zones. Demand zones are zones where investors or traders take buy orders from, initiate buy trades. So they are also characterized with imbalances, huge momentum candles, and impulsive candles. So on the 4 hours time frame, I realized that we just had a break of structure. That is, this eye was broken. We had this eye being taken out. Because I know that this supply zone needs to be mitigated, I was able to then start looking for possible entries to get into a buy so I can trade back into the zone. So on the, if I should map out my structure from this last eye, the market dropped, created an eye, created a high, created a low, created another high, created a low. Then we add this shift, breaking above this last high. Once we broke above this high, I was looking for entries in order to take the trade back up. So I went down to, okay, I had missed this move, market already mitigated. All I needed to do was wait for another possible entry. I was waiting for this eye to be taken out so as to find other entry opportunities. So I was monitoring the chart. I set an alert right here for when price will break, and that happened. The market went above, and on the 4th, this move was the NFP. I didn't trade the news because I already had my setup. Once we broke above this high, once we had this break of structure, I went down to the 15 minutes time frame, and I could see that the market created a demand zone. Market created this demand zone right here that caused this break of structure. The demand zone was also characterized with a huge candle. This candle right here was huge, and there were imbalances in the candles. We had this imbalance right here. So all I did was wait for market to tap right into the zone, and luckily the NFP came, and the NFP was positive for the US dollar, and it caused the market to drop, tapping into this demand zone. This demand zone, I refined this zone down to this entry, and also you can also use your gambus tool. If a zone is too wide or too big, you can use your gambus tool, and refine it. So I refined my entry, taking the full body of the demand zone, and I had my buy limits placed at this zone with my stop loss at this low, giving it room. I would have had my stop loss here, but I just wanted to be safe, so I had my stop loss at this low. I had my buy limits, and market tap just perfectly into the zone. And my target was for the supply zone on the daily time frame that caused this break of structure. So let's go back. My take profit was at this demand zone. The demand zone, at the supply zone, I mean, this supply zone, I refined it down to the 1 hour time frame. Yes, refined it to this zone, and I had my take profit at this level. So let's play. So the market tapped during NFP, and the market went all the way up to go to mitigate this supply zone that created this break of structure. So knowledge of these zones will really assist us to kind of know the direction where the market is going, where we can enter trades, where we can get out of trades, and the likes. So the market tapped perfectly. Now, yeah, now that the markets, I took profits, I took partials at some points, I think around this zone. I took I took partials here, and I left the remaining running. So now that the market we had this break of structure, the market is back to mitigate this supply zone. I also had my buy limit set at this 1 hour time frame at this supply zone. I had my buy limit set, and right now I am in a sell trade on gold, and I'll be looking to take profit at this low, because we have now tapped into this supply zone. So I'm presently in the trade, and I'll be taking my profits right here. So this is how to use demand zones, supply zones, and break of structures to look for trades and execute profitable trades in the forex market. For long-term targets, I'm expecting gold to come all the way down here to clear this whole liquidity that we have. So, but that will be long term. But for now, I will be taking profits right here. And for re-entry opportunities, we can see that we've started breaking structure again. Yeah, for re-entry opportunities, I'll be waiting for a break below this. I'll be expecting a break. Okay, we have a break of structure right here. This low has already been taken out. So I'll be looking for possible re-entry opportunities around this zone. We can see we have a little imbalance right here, and we can also see that we have a supply zone here as well. We have a supply zone here, so I'll be setting an alert right here. I'll be setting an alert at this zone and monitor price movement to see if I can get possible re-entry opportunities. So I hope you learned and gained one or two from my video today. Thank you for watching, and I will see you in the next video.